Hey everybody, it's Chuck Barone. Thursday, December the 7th, 2023. A lot of stuff today to talk about, guys. But before I get rolling on the show, let me take a half a second. Welcome everybody to the show, and as always, thank you guys for your support. You guys watching these videos, it keeps us making them. We appreciate you guys. All right, so let's get right into it today without a big to-do because we got a lot to talk about. Data today, big data coming, jobs, consumer credit, all kind of news. Markets the stock market actually had a fair day, but nothing to do with inflation or that kind of stuff. More like NASDAQ-driven AI, wow. I guess there's new Google coming out with a new AI they say is the new most powerful model, and on with advances in AI coming. So the market rallies today. The stock market up. The Dow Jones gained 62 points, 36,117. The NASDAQ was the big gainer, 193 points, 14,339 on the NASDAQ. The S&P also gains today 36 points, 45.85. So basically, what the market takes away, the market gives back ultimately. Here it is. It's been real choppy, but I like to see the market moving on data rather than on speculation on interest rates. So this was kind of a good day for the markets. The bond market today, basically a big nothing burger, nothing happening. I think tomorrow's jobs report is going to be the one everybody's waiting for. So basically today, no real movement in the bond market. The 10-year up 1 basis point, 4.13%, which is a great number. The 2-year unchanged today, 4.60%. So there you have it. Not much in the bond market today, which is good though. I mean, quiet days in the bond market are welcome because these gigantic swings we've been seeing, and I'm anticipating still to come, not the typical way the bond market works. So it's kind of nice to see a calm day for a change. The dollar today, well, the dollar gets hammered pretty good, almost a half a point down today, 103.66 on the index. Had just broken back above 104. Now we're giving it all back right away. The dollar is still a decent number for the dollar. It's just nowhere near the strength that it's been having over the past 18 months or so. Gold today, metals, precious metals, gold and silver. Mixed day today, kind of a weird day. We had gold actually gaining today, up $3.10, $2,028.20 for an ounce of gold. Silver coming down 8 cents, $23.79 for an ounce of silver. Gold consolidating above 2,000. That's a very, very good sight to see. Silver selling off a little bit. I think we're going to see a rally in silver. I really believe that silver should be above $25 per ounce, and it will be very shortly. Oil today. Oil rallies up a little bit, just a little bit, 27 cents per barrel. Sitting today, $69.65 for a barrel of West Texas Intermediate. As I've been telling you guys, oil wants to trade, it seems, between 70 and 75 a barrel. I anticipate that it's going to stay around these levels for a while until we have a reason to break out or break down. Maybe when the economies around the world come roaring back, China's back rocking and rolling, and so are we. Oil prices might spike up a little bit, but right now, not so much. Bitcoin today, giving back a little, down $368. $43,361 for Bitcoin. Still a very, very strong number for Bitcoin. I think this rally still has legs. It's been consolidating at these numbers. We have not seen any kind of real big pressure or sell-offs. So I think Bitcoin looking strong right now, guys. All right, so let's talk about news, stuff you guys need to know today. Jobs. Okay, so that was the first thing. The jobs report today. It's unemployment numbers today coming in at 220,000 claims. We were expecting 224,000, so very close. Pretty much in line with what they were expecting. In my mind, it's still a little too hot for the Fed's comfort. I think they would like to see 260, 280,000 at this number. Not getting it. Tomorrow, I think, turns out to be the big day. This news really didn't move the markets at all. Tomorrow's November jobs report is going to be the one. The sweet spot, in my estimation, between 75 and 150,000 jobs. I think they're anticipating about 130,000 roughly. I think if you get higher than 150, that'll panic them into believing the Fed can't cut. If you get lower than 75, now you're looking at possible recession and slowing employment down a little too much. So I think hopefully we're going to get somewhere in that sweet spot. Of course, that's going to be the news of the day tomorrow, and the markets will move on that news. Consumer credit. This was interesting to me today. I've been railing on this consumer credit number every month, screaming my brains out that consumers are going into debt way too heavy, way too fast. Well, a little bit of coming back down to earth this month in this consumer credit report. Consumers getting a little more serious, a little more choosy about using their credit. Credit only rising $5.2 billion. That's down from $12.2 billion the previous month. So that's a pretty big decline there. They expected the number at $9.1 billion, so they were expecting a 25% decline. They got almost a 60% decline. I think it's good to see consumers finally showing a little sense and putting away the credit cards and not signing so easily on the dotted line when these numbers are so high. I think this will probably continue with consumers can kind of get, you can gather rate cuts are coming. They're not exactly, keeping this a secret. And with rate cuts come lower rates on loans. I think consumers, if rates get into a good spot for consumers, I think there'll be a giant spike in consumer credit. But until rates get to that point, I think you're going to see consumer credit numbers continuing to come down. Okay, so those are the two big jobs, consumer credit, both really kind of going the Fed's way. Jobs did not come in real hot. Consumer credit, shows that even though consumers are slowing down a little bit, that's actually kind of what the Fed wants. Less demand, of course, and that doesn't give anybody a real incentive to keep raising prices when demand is slackening. Typically, slow demand leads to price declines, which is where we need to go. So it looked, these numbers coming in the Fed's way today. What was interesting is there's still 1.34 jobs for every person looking for one. But remember when that was well over 2 jobs for everybody looking for one? 1.9 jobs. Now it's coming back down. Obviously, these numbers showing that the Fed's getting what they want on jobs. I think that if this jobs numbers evens out, gets to 1-to-1, they'll stop reporting it for one thing, which will be nice. But the jobs market cooling off, the Fed's going to have its way one way or the other, and it's working out now in this jobs market. Also an interesting thing today, Moody's cutting China's credit rating today, knocking it from stable to negative. Ouch, that's painful. So their rating, sadly they didn't give a AAA or anything like that, just showing from stable to negative. Interesting. On Capitol Hill today, we had U.S. bankers up there screaming bloody murder. Jamie Dimon, whose stealth presidential candidacy I kind of pointed out last week, he's the main talker. They're fighting higher capital requirements. U.S. government looking at raising capital requirements for banks, trying to, they know what's coming with commercial real estate. They know what's coming with this recession. They want to try to, create a situation where banks won't need a bailout. These higher capital requirements give them significantly higher reserves. Of course, the bankers are screaming bloody murder about it, claiming that it'll drain liquidity from the system, make it harder to make loans, make rates will go higher, make it more difficult for consumers to buy houses and cars. They said mortgages, this is true or not, we'll see, but they were saying that mortgages could spike 30% from current levels. So 30% spike in a 7% mortgage certainly puts the mortgage rate up above 9%. I'm not so sure if I believe we're going to see that or not, but interesting day on Capitol Hill. Also, another interesting thing I was reading today, more people canceling real estate contracts. You remember I talked about this, I don't know if it was a month or two ago, the amount of people bailing from signed real estate contracts, just squirming out at the last second before they close. Another 53,000 contracts fell through in September. That's the latest data. August was at 60,000 contracts falling through before they close. These are the two highest numbers of contract cancellations before they close since they've collected that data starting in 2013. So over the past 10 years in real estate, these are the two highest numbers in contract cancellations before close, the most previous 2 months where data is available. It'll be interesting to see if that continues. I think it's crazy, man. So you got all of these things going in real estate at the same time. Now they show new home listings dropping another 8.9%. So that's just going to keep prices high as there's nothing to buy out there. And home sales themselves nationally falling 16.9% year over year. So as you know, I've been telling you guys, real estate's just in the crapper right now with these high prices and high rates. Something's got to give here. Either prices got to come down to support those rates, or rates have to come down to support those prices. As long as we're going to keep prices and rates high, real estate going to continue to struggle. You're seeing more of it gives a huge advantage to the institutional buyers who are scooping up everything they possibly can get, killing first-time home buyers. And it's really sad because, you know, I've been doing mortgages, as you guys know, for a long time. And one of the things I talk about with all my first-time buyers is how buying a home is basically one of the foundations for building real wealth. You know, you buy a house and you live in it. Like me, for example, I've lived in my house since 2000. I'm not a guy that moves around much. And my house has pretty much more than tripled in value since I've owned it. I don't know of anything else that's tripled in value since 2000. But I guess there's probably some stuff, you know. But nonetheless, real estate, nothing else, no other investment gives you not only the capital appreciation, but gives you the privilege of living in that investment while it's growing in value. So housing's still, in my mind, one of the best, but it's very, very tough market right now. If you're thinking about buying a house, especially if you're a first-time home buyer, keep your powder dry. I think in the springtime, just before the spring, if the Fed moves to cut rates, you're going to see a pretty good market for real estate. U.S. government today, this was interesting too. The U.S. government today coming out challenging patents for pharmaceutical companies. Government says it can break these patents and give the formulas to other pharmaceutical companies who may produce the drug and sell it cheaper than the big retails. And they claim that they can do this because public money, public funds, paid for the research to create these drugs. So what's been happening is Big Pharma, you know, they got every advantage with their lobbyists, been taking public money, doing the research they need to create these new drugs, and then giving no benefit to the taxpayer or the government for the discovery of those drugs and the funding they did to get those drugs created, charging full pop, gouging, we're paying 4 times the amount here in the United States for most drugs that they do in our neighboring countries and around the world. So I think this is interesting. I don't know if it'll fly, you know, constitutionally. Breaking a patent seems to be something that's sacrosanct. I don't know. I don't know if you can do that, but it was interesting to me that the government thinks they can do it. And if they get away with it, where does that stop, right? Anyway, guys, that's it for the day. I've been rambling here. We'll be back tomorrow to bring you guys the big news. It's jobs day. It's going to be the big one. We'll see how the market reacts, what those numbers are, wrap this crazy-ass week up. You guys have a good evening tonight. Until tomorrow, Take care. Thanks.